Good morning and welcome to Morning Trade. I'm Karunya Rao, and over the next half hour we help you with all the strategic actions that you can take in today's trading session, along with answering your stock queries and discussing the big trends playing out in the market. But before beginning the show, let's see what the global handover looks like. European markets were lower on Monday after US Fed Chair Jerome Powell signaled higher interest rates would likely persist in a bid to tame soaring inflation. All sectors in major bourses slipped into the negative territory. Tech stocks led the losses, down over 2%. It's the second straight day of losses on Wall Street, with Nasdaq losing over 1%. Stocks in Asia Pacific open higher despite a weak handover from Wall Street. SGX Nifty also indicates a positive start for the Indian markets. And on the show today, we try to decode whether the current market mood is a minor hiccup in a bull run or start of deeper correction. Stocks in the spotlight: Thyrocare, Orient Cement and BLS International. Okay, let's get going and talk about the markets with our technical analyst, Gaurav Bisa. Good morning, Gaurav. Tell us what the trade setup is hinting at and what should traders and investors brace themselves for today.
Good morning. Thank you for inviting. If you look at the overall setup in Nifty, the trend remains bearish. I would not call this as a top because you can only think about tops and bottoms in hindsight. Nobody can actually capture them. But overall, if you look at the sentiment, then a few days back, we fell towards 17,350. We had a very strong candle that day. We comfortably closed below that. We went towards 17,200. And now we again saw a 150-point recovery happening. So the point I'm trying to make is, even though we are seeing recoveries happening from gap down openings, the previous lows are being taken out. So that is not a good sign. On the other hand, if somebody wants to play for next couple of trading sessions, then I think 17,220 in Nifty futures is going to be the key area to watch out for. That is where the daily Kijun support area is also placed as far as the Ichimoku setup is concerned. If that is sustained, we can head towards the low of 7,450, 480. If you look at the option chain, 17,500 has commanded the most additions. It's not just the highest OI concentration, but 1.2 lakh shares has been added, which basically means aggressive writing has happened at 17,500 call. Unless we don't see a sharp recovery or short covering happening in that particular strike, I would not be playing for a higher upside. But yes, the downside seems to be limited for 2 days. I'm not talking about bottoming out, but for a couple of trading sessions, we might settle around 17,220 and above. So on that perspective, when it declines towards the 17,220 to 40 can be utilized to create fresh longs, keep a 70-80 point stop loss, play for 17,450 kind of targets.
Okay, all right. Let's talk about some individual stocks as well that could be in the limelight on back of news flow. The first name I want to flag off is BLS International. Now, that's not something that we discuss very regularly on the show, but there's been some fun action here which could bring the stock to the forefront. Nomura Singapore has bought about 0.5% stake in the company. They've bought 11 lakh shares via open market transactions at an average price of 230 per share, slightly higher than where the stock shut shop yesterday at 228 levels. Gaurav, how is the chart looking for BLS International? Last 1 month, yes, it has made some highs, but it couldn't hold on to those gains.
I like the fact that not many people look at certain stock. That is more interesting for me. So before the corporate action was trading around higher levels, and after corporate action also around 150 is where it witnessed a breakout retest, and then we saw a very sharp up move. So on a very immediate basis, the supports are placed at the area of 200, which is going to be the previous swing high support area, and that is where the 55 EMA on daily chart is also placed. Any declines towards those levels can be utilized to buy the stock, and or even on a tight stop loss can be 219 also. One can buy here also, or in my opinion, one can buy towards 205, keep a stop loss of 195, play for previous swing high targets of 240 to 50. So in my opinion, structure is very good. It's in structural uptrend, series of higher tops, higher bottoms. Setup is good.
Okay, well, the setup looks good, it seems. Moving on to Thyrocare Technologies, the second stock that could be in news. Fundsmith Emerging Equities Trust has offloaded close to 6 lakh shares of the company via open market transaction. Of this, around 2.7 lakh shares were sold at 614.8 per share and 3.2 lakh shares at 615.1. Now, clearly, there's been some offloading of shares here. The stock may react negatively to that news flow. But talk to us about the medium term. I mean, how does it look on the charts?
The chart setup is quite clear. It's been in the downtrend. We saw some amount of consolidation happening. It was showing early signs that we might see a rounding bottom formation, but there was no follow-up. There was no confirmation as such. And if it sustains below the previous area of 600, yesterday's low, the pressure might mount. The only saving grace is RSI, which is just about nearing 40. If it sustains below 35, 38, then I think the pressure, downward pressure will again increase. So in my opinion, this is something that people should be avoiding to buy fresh. And people who already bought at high levels, I think keep a tight stop loss and maybe around 588, 589. Below that, you exit.
Okay. And the third one we want you to address is Orient Cement. Again, some bulk deal action has taken place here. Franklin Templeton Mutual Fund has cut stake in the company. They've sold 1.5 lakh shares, nearly 0.1% stake in Orient Cement. They've reduces their stake, which was at 3.2% earlier. Now it's down to 3.12%. So about 0.8% to be precise is what they have offloaded. How's Orient Cement looking on the technicals, and is that a counter that could react negatively today and in the coming few days?
See, it's trading in the range. If you look at daily charts, it's been moving between 110 and 125. So it's difficult to say whether it is going to see an upward breakout or downward breakout. Let us see whether it's sustaining above 125 or not, or below 110 or not. If it breaks either of the data points, then one can take an action. It's futile to actually preempt a range-bound stock.
Okay, all right. Overall, if we look at the market breadth, we want to understand the fundamental view as well. Gaurav, request you to stay on with us. We're bringing another Gaurav on board to talk about the fundamentals. It's Gaurav Dua from Sher Khan. And Gaurav, pleasure to have you on board, and thank you so much for taking time out to join us today. Let's talk about the trend that's playing out right now. Do you think it's a minor blip in the upward trajectory, or could there be something more deeper in terms of selling, or something more meaningful to this weakness that we're staring at right now?
So, fundamentally to take a call on a very short-term move in the stock market is not very easy. But however, what we see is that markets all across the world, especially in India, had shot up sharply. So if you have a 2,500 point kind of a rally in a very short term, and there is some event this globally, what it has done is triggered some kind of this profit booking, and I think it is healthy. So if you lose about 800,000 points from the top, that will give this thing, markets some time to absorb the news, consolidate, and then again start moving ahead. So our base case assumption is that for the next half of the year, we might stay in a range, and that I think will be good for the equity markets. But overall, we believe that next 1.5 to 2 years, if you have that kind of a view, market is going to give you many opportunities, and we believe India is standing out in the world, and we are starting on a multi-year upcycle, and that is what the investor should actually focus on.
All right, but will the seesaw mode continue for the rest of the year? Do you think that's going to be the mood, the overall flavor of the markets?
Yeah, I think the markets will give you opportunities. It could remain, volatile. Already, after the Jackson Hole summit, there is around 71% probability now of U.S. Federal Reserve hiking interest rate by 75 bips in this September itself, followed by another hike. Same we expect that RBI also in this month is going to increase this interest rate anywhere around 40 this basis point to say 0.5%. So interest rate hikes will go on. The market had a sense that inflation somewhere is is this thing peaking out, and that is why we've seen such a good upmove in these markets. However, whatever we hear now, be it from the US Federal Reserve or this thing ECB or the RBI MPC, MPC this in minutes, most of the central banks now do see that inflation might be sticky. Now that is not so very good news, for the equity markets. And in Europe, US, both these central banks now are very clear that they are willing to take some, some this hit on the economy, willing to face some pain. That means that they will remain aggressive, right? So they will remain hawkish. So in this kind of an environment, we don't expect very huge kind of upside from here in the this thing short term. However, we believe if the benchmark indices, Sensex and Nifty, they stay in a range, you might see a lot of equity in this broader market. So that will give opportunity to the short-term investors also.
All right, that's heartening to know. Any themes or any pockets of the market that you're betting on right now?
So from the investors' point of view, we still believe that there's a lot of steam in auto. Though auto in past few months have outperformed, but if you look at a longer time frame, either 2 years or this 5 years, auto has this grossly underperformed, and we believe that next few years for auto is going to be good. Even on the technical side, we believe most of the institutions are still underweight on auto. So there is a lot of upside in the short term and also over next 1.5 years or 2 years in this auto and auto ancillary. That is number one. Number two, we believe that public sector as a space could outperform. And within that space, we believe that the public sector banks, that's number one, and the public sector companies which are into defense, that is this basket number two. And third is basically the energy stock in this space, something like an NTPC, Power Grid, and and this Coal India. So within the public sector space, we believe that these pockets can do well.
All right, Gaurav, thank you so much for joining us and talking to us about the market trend and the themes to watch out for not just months but years to come. Back to Gaurav Bissa once again to talk technicals and address your queries. The first one I want to bring up is from Narendra Pandey. He wants your view on Aether Industries and he wants to hold it for the long haul. How is it looking?
Which stock you talked about?
Aether Industries.
I'm sorry, I'm not able to find it in the charts.
Okay, let's move right on to the next one in the meantime. What is the outlook for KPIT Tech? Subramaniam has written to us on our live feed. If you could address KPIT.
For a very short term, I think the trend is still positive. It's making higher tops, higher bottoms on the daily charts. So any down move towards 520 can be bought into, keeping a stop loss of 495 and play for previous swing high of around 585 to 600.
All right. Okay, moving on to our next question then. This is from Prince Paliwal and he wants your view on SBI. Typically, I think whoever we've spoken to in the recent past is largely optimistic about SBI. Do you also echo the same sentiment?
See, there is a very strong hurdle at 550 on weekly charts of SBI. Basically, it's trading in a range. 550 has been a very strong deterrent, and 425, 430 has been a very strong support area. Unless it does not give a weekly close above 550, I would not be that positive. Yes, for 1 or 2 day purpose, it might fall 2-3%, it might rise 3-4%. That is fine. But overall, if you want to talk about the momentum or you want to talk about trend, I would not be too aggressively bullish till the time it does not give a weekly close above 550.
Okay. The next query is on Adani stocks. Vijaya has written to us and wants your view on Adani Green and Adani Wilmar. How are both of these charts looking?
See, both of these charts are strong, but both of them have moved strongly from the support area. So 1800 was the support area for Adani Green. It's currently quoting around 2330. So this short is very much skewed. If you have keep trailing stop losses, but for fresh entry, I would not be too keen in buying these names. Coming to Adani Wilmar, we saw a strong breakout sort of happening, but now it's just about trading around immediate support area of 650. You can use that as a stop loss, and you can play for an upside towards 715, 720. Let it give a close above the levels of 750, then you can see a very strong breakout sort of coming in. It is also trading in a range, just that it's trading near the 55 EMA support area. You can use it as a stop loss.
Okay. Couple of queries coming in for IT heavyweights. Gaurav wants your view on Infosys. Then there is Arun Srinivas, who's written that he wants your suggestion on HCL Tech, Tech Mahindra. Can you give us a comparison of how the three names are panning out in terms of their stock pattern?
If you're looking for short term for next few days, I think they are best avoided. So, for example, if you look at Infy, it has been trading between the range of 1550 and 1388, 1390. It's at the middle of the range. Same goes for HCL Tech, where we saw some amount of upside coming in last couple of a few weeks. But then again, the support is placed at levels of 875. Hurdle is placed at levels of 985. So they are right now at the middle of the range. They witnessed a very sharp upside, and then we have seen a correction last few trading sessions. And now they are trading within the range. For short term, people should avoid IT names. For long term, let the correction happen. In next 2 years, I'm expecting a very strong outperformance in the Nifty IT index. But for that matter, let it correct a bit.
Okay. We were just speaking to Gaurav Dua of Sher Khan, who was very optimistic about auto stocks. We have two queries with respect to the same theme. One is on Ashok Leyland from Kulbhushan Kapoor, and one is from Krishna, who wants your view on Tata Motors. How are auto, especially OEM companies like Tata and Ashok Leyland looking on the chart? And if there's a third name perhaps that you like better?
See, there is a very strong support, strong resistance in Ashok Leyland at area of 150, 155. We had recommended to our clients as well, and it turned out to be an incorrect analysis. But if you connect the tops of 2018, it's been trading and taking hurdles at those areas. So till the time we don't have a weekly close above 150, 155, it will not be on my list. Tata Motors, it has a similar chart to that of SBI, where we saw it has a breakout at much higher levels. Same is the case over here. Unless we don't see a close happening above 550, major upside will be limited, restricted. But if you look at the daily chart, then the immediate supports are placed at 440, 435 for trading perspective towards 475, 480. Basically, it is stuck in the range, and the consolidation can continue for next few weeks.
Okay, all right. The next query is on Tata Steel from Ravi and wants your view on the same. How's the chart looking? It has seen a good run up last 3 months, but of late it has given up those highs that it achieved, a couple of weeks ago. So what's the trend likely going forward?
It's very difficult to play metal names when the markets are very dynamic, very volatile, because they also tend to give very false breakout sort of. So 108 used to be a very critical hurdle area, and we saw a breakdown. Again, the stock rising above those levels. For people who want to buy, I think they should be buying only once it trades above levels of 110. Then you can keep a stop loss of 104, and you can play for targets of 120. Till the time it does not happen, it will be on my avoid list.
Okay. The next query is from Siddhi and wants your view on Nazara Technologies. Now, this one saw a solid spot a month ago, or 5-6 odd weeks ago, but it's not been able to sustain or hold on to that 700 levels. Right now, perched at 630. Do you think it's a good time to buy or stay away?
For people who want to buy for at least 1.5 years, I think they can buy. There are a couple of reasons. So the fall that started from October 2021, it has been on less volumes compared to the rise that we saw after it was listed. Limited history, but whatever is available. So that is a good sign where the rise has been on incremental volumes, the fall has been on less volumes, and now again the consolidation is happening. We are seeing spots happening on positive days. The fall have been less. There's a bullish divergence as well on daily and weekly charts. So on that perspective, yes, it is looking good. Any declines towards level of say 565 to 580 can be bought into. Keep a stop loss of 500, and you can ride the trend. You can see a really strong upside. There are signs of early signs of trend reversals. In my opinion, the stock is looking very strong, but you add on decline because the stop losses are deep.
Okay. Very quickly then, Pani has written to us. He wants your opinion on paper stocks, especially the likes of West Coast, Andhra Paper and JK. They've seen a good spot of late, but do you think any of these names are attractive from a future standpoint?
See, that is the most common mistake retail investors do, where they don't catch the trend at the right time, and then there's a feeling of missing out, and then they buy at any random point, and they will say, I can keep for 3-4 years, and if there's a correction of 5%, they panic. So the point is, for trading or investment, I don't think this is the right time to buy, because we have seen breakouts, strong breakouts, and we have seen strong upside as well. So the risk rewards are going to be very much skewed. The supports are very much lower. So you add these names on declines, but not at the current juncture.
All right. Unfortunately, guys, all our viewers, we have this much time only on the show today to address your queries. Come back tomorrow. We'll have them addressed again. Not tomorrow, actually, day after when the market is open. But Gaurav, before we let you go, want to know what your stock picks for the day are.
The first would be buy on MMTC, where we have seen a very strong breakout happening, a consolidation breakout trading above the short-term moving edges now. For targets of 47, one can buy with the stop of 42. Second would be buy on decode, where the structure is very strong on daily and weekly charts. We have seen breakouts, the volume participation is increasing. Stop loss of 610, targets of 685.
All right, guys. Thank you so much for tuning in. And Gaurav, thank you so much for chatting with us in detail about a host of queries and your views on the market and your stock picks for the day. With that, it's a wrap on Morning Trade. Thank you for tuning in. Stay tuned to Money Control. Markets with Santo and CJ comes up next.